Hello guys, Panda Trader is here, and today we continue to trade with my trading robot as I already announced him to you guys. And let's choose our first currency pair. It's gonna be British pound to United States dollar today. We are choosing the right expiration time, run analyze, for sale. We are setting, indicate the priority of the movement for sale. The probability of leaving for sale is 100%. So let's check this out and trust my trading bot. And today guys, I will give you more information about how the economic conditions of countries affect our trading market. And things here are different in weak economies. Consumers save every penny and spend their wages reluctantly. In such states, the only spender is the state itself. Be that as it may, the state of the economy always directly affects the currency market. Capital movement. Money does not stand still. Globalization, development of internet technologies and computer networks have led to the fact that trillions of dollars are moving around the whole planet, and the turnover of the forex market alone is as much as $5 trillion a day. A couple of mouse clicks and you can buy any asset or on any exchange, even currencies, futures, on indices or traditional stocks. There are a lot of possibilities, any currencies, any opportunities. Capital flow is, roughly speaking, the amount of money that flows in and out of the country as a result of investors buying and selling all kinds of assets, from stock exchange assets to real estate and businesses. The main thing to understand is whether the capital flow balance is positive or negative. If a country has a positive balance, it means that more foreign investment is flowing into the country than is coming out of it. And with a negative balance, it's clear that the situation here is exactly the opposite. Investments fly out the country, but much less money comes in. What does this have to do with currencies? If more investments come into the country, the demand for the currency of this country increases, because foreign investors have to constantly sell their currency to buy local currency. The more demand, the more valuable the currency, the usual balance of supply and demand. Remember guys, that economic calendars tell you what has already happened, and rest assured the market has usually already adapted to the new realities as the analytical departments of the banks and companies make their forecasts even before the news is released. So when the news comes out, it's usually only needed by lazy people who haven't done their homework. A lot of news is just rumor, speculation and analyze. This is when an economist sits down and pushes whatever comes into his head. The work of these guys can be assessed by analyzing the ruble exchange rate, all of them set in a puddle wholesale. So take such news and reviews not seriously. Then I'm gonna tell you about market consensus. When the market, represented by all its participants, comes to a general agreement on the upcoming economic news, it's market consensus. A lot of people are involved in market forecasting, from bank analysts and economists to fund specialists and rich traders. All of these many forecasts turn into the very average seen on economic calendars. They are just the average temperature of the madhouse, nothing more. There are only three things that can happen to economic data. First one, it's as it was expected. The analysts, for the most part, were right. Second way is better than expected. And the last one, worse than it was expected. Any option here, guys, is very important. Any divergence between forecast and reality in any direction always affects the market. The bigger the discrepancy is, the bigger the influence is. And now, I'm not forgetting about my contest, guys, which I'm making for you every video. And if you want to win $50 from Panda Trader, you just need to like this video and write any comment you want under this video. And our first deal closed with the profit today with the signal from my trading bot, which you can find under this video, the link for my trading robot. And now let's find the second deal of today. Let it be the pair Euro to Swiss franc, and we're finding here our currency pair in my trading bot, Euro to Swiss franc. We are checking the right expiration time, run analyze, for sale. Indicate the priority of the movement for sale. The probability of leaving for sale is 96%. Let's trust my bot and check it out. And now more how the smart traders react to these changes. Smart traders take into account the market reaction to the divergence of data in advance and use special trading systems to exploit the corresponding effect. From high-frequency algorithms to manual strategies. For example, you can open a deal before the news release, and you can immediately after. Or you can open a trade later when the market calms down and all emotions cool down. So if you have decided to get in touch with the news, you should watch the market at least an hour before the real data is published. Even then, the market will demonstrate behavior that is directly related to the release of important news, which you still have to wait for. And to play these news games, you just need to calculate all the options here. And now let's have a look at the following situation. What happens if the real data is better than expected? And what if it worse? How can the market react? And what is your plan in each specific situation? Without a trading plan for the news, it's better not to get involved, guys, in them at all. Otherwise, it will be a guessing game. It's ideal to work out the news on a demo account, just on a chart, or trading on paper, and not trading to enter blindly according to forecasts in economic calendars. This is not how it works. Fundamental analysis as such is panel the economy, the ability to build all sorts of interesting correlations between various factors. This is not news analysis as beginners think. The news itself is just a cherry on the cake, and trading on the news is a separate type of analysis which should be dealt with separately. Nevertheless, you should know the basics described in this lesson. It doesn't matter whether you trade taking into account economic factors or not, but without the same key rate, you will not know what powerful mechanisms are behind the movement of any world asset. And now, let's have a look, guys, at the examples of the impact and influence of political events on financial markets. And what I've got here for you. First one is United States presidential election. United States elections are traditionally accompanied by increased volatility in financial markets as investors try to anticipate the policies of the future president and their impacts on the economy. For example, the 2016 election led to stock market gains on expectation of tax cuts and regulations. And second example is Brexit. The United Kingdom's decision to exit the European Union caused significant uncertainty and volatility in the financial markets, particularly in the foreign exchange market, where the British pound fell significantly against other currencies. Next example is trade wars between the US and China. The introduction of tariffs and counter-tariffs between the two biggest economies in the world has created uncertainty in global markets, influencing the stock prices of companies in many sectors, from technology to manufacturing. Next example is conflicts in the Middle East. Tensions and military actions in this region often cause changes in oil prices, directly affecting stock markets and the economies of both oil exporting and oil importing countries. And these examples show how political events can lead to short-term market changes and shape long-term trends in financial markets, highlighting the importance of political analysis in the investment process. And now we are about to close our second deal of today, and that's it for today, guys. 2 out of 2 deals we closed today in profit. Thank you for watching. Do not forget to subscribe to my channel, join my free Telegram channel as well,